Hey guys, it's Walter here. We got a couple of questions from Daily Trader members, Tom and Raheel, and I just thought I would post the video for everyone so that everyone can see it. So Tom was asking about the Euro CAD, which, as if you follow my trades in the Daily Trader, you know I've been watching this pair, and the Euro CAD actually has a really interesting on the daily has a really interesting box set up here. And we've broken out of that box last week, and now we come right back up to the edge of the box. So the question that Tom had was, do we have a last kiss here? And the answer is we don't know. And you know, a couple of things I should mention. First of all, the best last kiss trades don't immediately come back up to the box. So in a sense, I would be surprised if this actually ends up being a valid last kiss trade, because they usually will spend candles away and then come up. It's not usually an immediate retouch, okay? However, having said that, we still could get a last kiss trade. The issue I have with it, I guess, is that we actually haven't been away from the box. For those of you that don't know what the heck I'm talking about, a last kiss is when you leave a consolidation area, which is what I call a box, and then you spend time outside of it, you come back down, touch the edge of that box, bounce off of it, and then go in the trending direction. It's usually a good trade to get into if you like to trade breakouts, or you want to get in on an early move, because it could be a really strong move, given that the market's been basically going nowhere for a while. These are really good trades to get into if you have some sort of trailing exit or something like that. So this right here was a possible last kiss that failed. So it broke out, it spent one candle away, came right back down, and then this candle would have been the trigger candle, because this was the first bullish candle off of the edge of the box. You can see the market actually never traded higher, so an order would have been in around this area here on 44.61, and you can see the market actually fell back right into the box, and when a candle closes inside the box after a last kiss, the trade is over. So even if you did get in early for some reason and didn't wait for the bullish candle, you would have been out once the market closed here. Now, the same thing could happen here, because like I say, we actually haven't had a candle that hasn't been in or touching the box. If you think about it, this breakout candle was in the box. It opened in the box, and then it fell out of the box. Then the next candle came right back up and touched the edge of the box. Yesterday we touched the edge of the box, and today we've touched the edge of the box. So we actually haven't really spent a lot of time outside the box. So that usually when that happens, it's usually a false breakout, and we'll usually end up straight back in the box. However, if we get a big red candle that pushes off this edge of the box, and the candles that we have today, tomorrow, the next day don't close inside of the box, we would have a nice setup, and I would put a sell order 5 pips below the low of that bearish red candle. And if the Asian session makes a lower low, I'd put my sell order 5 pips below the Asian low. I just don't want to get triggered during the Asian session, basically. I'd enter this order in at the end of the Asian session, so it's triggered during London or New York session. Now the other, Raheel had a question about the Kiwi yen, this kangaroo tail. Now, I'm not sure if this is on a valid resistance level. Let's just assume that it is. No, I don't think it is, actually. I don't really have... no, I don't really have this as a valid resistance level, number one. But that's not the most important thing. The most important thing to me about this trade is that I'm bullish this pair, right? I want to go long the New Zealand yen. In fact, I want to go long just about every yen pair there is, especially the dollar yen, the Swiss yen. All of these I see as opportunities to go higher. So, having said that, even if I did get a brilliant kangaroo tail, and actually I don't think this is, some people get so-called pin bars, Pinocchio bars, that Martin Pring popularized. They get those mixed up with kangaroo tails, and I think what you'll notice is that the open and the close are not in the bottom third of the candle, and that's true. So if you actually, so I've got this fib grid that I've drawn here on this candle, and what you'll notice is that the open is above this 33rd, this 33% level. So there you go. So we actually did not see the market. We did not see the market open low enough to make this a a kangaroo tail. So it's not. But even if it were, I would take really quick profit on this, maybe come down to here, or even where I'm at right here. It didn't trigger the first day, but it would have triggered yesterday. I think this is going to be a shallow minor pullback, maybe to 91.14 before it bounces and goes higher again. And I'll be in on the buy side of that. And so that's why I would not take the New Zealand yen. However, with the Euro CAD, I would wait for that one and see if we get a really nice bearish candle. I wish you happy trading, and we will see you soon. Take care. Bye.